markets right now, and how much more headroom do you believe is there for the index to move up, if at all?
The big move in the markets is likely to come in the second half of the year. For the next month and a half, you'll broadly believe that the markets would be trading within a band of 24 to 26 in a range till at about the point in time when you have clarity on the tariffs. That would broadly be the construct as of now. I think what is supporting the markets, firstly, the markets are very, very light. The retail participation is very anemic, so to speak. You have institutional buying, which has come through both on the DI and the FI front. The earnings season, Q4, has primarily been better than estimates, both on the large cap side as well as the mid and the small cap side. There was a lot of apprehension that there's going to be degrowth in the mid and small cap space the quarter gone by, but I'm afraid that that has not come true, and the earnings for the mid and small caps have come in better than estimates. That's the main reason why you're seeing broadly buying in the broader markets per se. And, the flows on the monthly SIPs, etc., have pretty been decent. So all in all, I think fundamentals will need to keep just getting justified in Q1 and Q2. Of course, we are looking at rate cuts and so on and so forth. But broadly, I think markets on an overall basis range bound in a 10% band between 24 and 26.
Right. Good morning to you, Manish. This is Cheryl also joining in the conversation. And like you said, this earnings is one that is actually ruling the sentiment when you talk about the markets. In the next 1 to 2 quarters, we need to see that momentum actually sustain when you talk about the earnings. But are there any select pockets right now that are looking very attractive to you, given the fact that, yes, we did see the correction, but post that we've seen a very sharp rally, a stellar one at that when you talk about the markets. Are there any pockets right now that are still actually emitting that value that you can go ahead and look to invest in? Because I'm sure a lot of FOMO effect has already kicked in.
Yeah, so, when the markets were at 22,000, IT as a space was looking very, very, well valued or very decently valued, very benign in terms of valuation, given that, now you have some sort of a clarity coming out of the major issues on tariffs with China, and, the chances of a US recession has come down from around 75% to something like a 40% probability of a recession. So at the margin, IT would be outperforming in the last 2-3 months. That's one. Secondly, Operation Sindhur has given a lot of fillip to the defense names. I would primarily be going on where this additional 40,000 crores worth of orders are likely to come through. This is going to be broadly in the area of artillery guns, missile programs where electronics, etc., would be a part. So these would be some of the areas that at the margin look pretty decent. Consumption remains pretty much on. Discretionary consumption names have broadly performed better this quarter, and more to do with the urban consumption. Staples, we need to watch out for the second half of the year numbers. Again, this whole consumption space looks good. BFSI, particularly insurance, health insurance, life insurance, of course, nothing much to read into the monthly life insurance numbers, very, very low. But I think on a valuation front, from the next 1 to 2 year point of view, again, this is one space looks good. Pharma has not got dented much. Again, it looks a good story for the next 1 to 2 years, particularly the CDMO space. And that is where the entire focus would be currently, according to us.
Taken. Manish, thanks so much for joining us. This is Snehi also joining in the conversation. Last time we interacted with you, you believed that the entire banking and financial space looked like it had more value to offer. Given the kind of numbers we've seen in Q4, it's been a good Q4 coming in for banking and financials. Over the year as well, year-to-date basis, these are the top 2 sectors that have been gaining. Now, do you believe that there is still some value in this sector in terms of the valuations? Do you believe they are justified, or do you believe that there is some more run-up left over here?
So, ever since the second quarter of FY25, when the MFI issue came to light, of course, it was very clear that the next 2-3 quarters, there's going to be elevated provisions, particularly in the MFI space and the retail space. That's getting manifested in terms of provisions that we are looking forward to in the mid-cap banking names. We got to watch out how this whole provisioning plays out. But I think the large cap names, both in the public and private sector space, are better poised, at this given juncture. But at the same time, I would believe that there is definitely value emerging even in the MFI space, because a lot of provisioning has already happened. And particularly the stocks have also priced in most of the negatives. So wherever there is valuation comfort, and most of these names are available at, let's say, one-time price to book, and a decent growth going forward. And if you have, let's say, the bulk of the provisioning or most of the pain getting priced in, then again, this is one space which looks quite interesting.
Also help us with your take and the latest take rather on insurance pack, because I know that you will not talk stocks, but if I can name some, then Star Health as a whole is up around 22% just in the week gone by. HDFC Life hitting its 52-week high, and even SBI Life seems to be catching up. Very select counters when it comes to the life insurance space. Give us some sense that what is your current take on this particular segment, as well as are you still holding your positive stance on this one?
Yeah, positive, very positive on both the life insurance and the health insurance space, particularly on account of valuations and bulk of the 80C impact, because individuals are transitioning from an old regime to a new regime, where there's not too much of not any deduction available for life insurance. So given that most of the fear around the life insurance was that life insurance as a product was taken primarily because of tax breaks on 80C, I mean, that's now come in the base, and you're looking at pure protection as a mechanism for the life insurance companies. Valuations are very, very decent, so to speak, and broadly you could assume that on a long-term basis, if you assume that life insurance or maybe even a health insurance is at the base case, or the worst possible situation would be growing at around 15%. Now, whether a 15% growth into the future has got priced in the current valuation, I would tend to defer. So from that point of view, I think the established life insurance names plus the major the health insurance names which you took, there is going to be price increase, and you are looking at valuations in and around 3-time price to book. Of course, there was pain on the underwriting segment, and now that has got broadly priced in, so to speak. And on this current base, the most of the good health insurance companies, I'm taking names, I'm alluding to the private ones, not the public sector ones. They would be working towards combined ratio of closer to 95-96% going into the future. Again, worst of the pessimism in the health insurance names, according to me, is again priced in, and that is where there is an opportunity.
Rationale behind Manish actually preferring the entire insurance space. But Manish, let me put the spotlight on these narrative theme stocks, right? When you talk about the narrative theme, it has to be, last year you did see that rally come about in the PSU counters, be it the power space, be it defense, be it for the matter of fact railways as well. And if I could add to that list, as QSR space also saw a lot of excitement when you talk over the last 1 to 1.5 years or so. Do you think they will make a comeback, and should now people actually avoid, or investors avoid, looking at this entire narrative theme and look at select pockets where you have valuation comfort instead?
The PSU theme, broadly, according to me, has again seen the worst. The PSU pack as a whole going forward is likely to outperform the markets. Already a lot of pessimism has got built into it, and the last 6-9 months has been very damaging for the PSU space as a whole. It's coming back from the lows. Earnings growth broadly are intact for most of the well-known PSU, and you have valuations which have got corrected. So according to me, the PSU theme will again come back into the limelight. You have a certain pockets of these, and of course, all the PSU names are up from their lows, quite, to say the least. And, that is where I stand as far as the PSU packaging. I was never very bearish on PSU as a paid, but now even more bullish because, the valuations have come off and earnings growth is intact, dividend yields are very good. As far as the QSR space is concerned, this quarter numbers again is a mixed bag. Some of the names, particularly the pizza ones, have delivered good numbers, but valuations are exorbitant. The burger space, again, the numbers have not come in as expected, but still keeping the faith as far as FY27 projections on some of these companies are concerned. the turnover guidance which they've given and even the operating leverage on the margins front should come through. So broadly, valuation, of course, you can't really expect a runaway growth because the valuations are slightly on the elevated side. But these are very decent quality businesses where if the earnings growth comes through, then broadly, I expect that the second half of this year would be better than the first half of this year in the QSR space. And broadly, if I'm bullish on consumption, then this is one space which I think would stand out. Some of the names like your Jubilant or let's say a Zomato, which are there in our portfolio, I think we tend to stick with these guys and believe that they could deliver broadly in the medium to long term.
Manish, you've spoken about QSR, we've touched upon consumer discretionary, but what's your view when it comes to core FMCG? Because this time volume growth has been better than expected, even though it's nominally better, but still it's been better than expected. Revenue expansion has happened in across the board. What's your take when it comes to core FMCG, given that on the fundamental side we're also expecting a very good monsoon this year? And although urban demand has not picked up to the extent we would have liked it to be, it's still now picking up some ground when compared to rural demand. So what's your take on FMCG now?
The only concerning fact is the valuation front vis-a-vis the growth. I mean, can't expect more than a 10 to 12% sort of revenue growth. And of course, companies would be vying for the volume growth per se because inflation is going to be very benign. So it's a pick and choose, where growth vis-a-vis valuations have to come into perspective. On a broad basis, consumption would tend to get a lift. Broadly, now that the IMD has predicted good monsoons even this year, rural economy is coming out of the corner from the last 2 years, downturn. And these would help at the margin. On the headwind side, in the FMCG names, it's going to be valuations. There's nothing more to basically look into it. It's basically growth and valuations. It will be a pick and choose.
Right, Manish, but the other thing that I wanted to have your take is on the impact of the tariff. Well, of course, some of the experts do believe that the worst with respect to the tariff is now behind us. We are already seeing some of the negotiations that are underway. But while this news flow was around, Manish, all these export-related counters were seen to be taking a backseat. We have seen a sell-off in some of these select pockets. But now what we are getting to here is that the tariff implications are not expected to be that severe versus what was anticipated earlier. Do you believe there stands a chance where once again we can look at some of these pockets?
Yeah, so I think that has got to do with the US recession, the probability of US recession, how big or how shallow that's going to be. That's one. And the US dollar, now that Moody's has now downgraded US credit, US dollar is again going to be under pressure. But if the tariff issues is nothing more than, let's say, 10 to 15%, then broadly, I think it's going to be a sigh of relief for the entire global markets and they'll tend to rally. On the other hand, if the tariff implications are going to be more like 20% and above, then it's going to be a negative shock. But as we see the story unfolding, China tariffs are being talked about at base case at a 10% plus something. And even in India's case, we are hearing about an FTA agreement. I mean, these are very, very positive signs as far as India is concerned. We'll try to become more competitive in the global landscape when it comes to our positioning on the exports front. This is going to be extremely positive. So this story will actually play out very well in the medium to long term. On the immediate near term basis, I think the level of tariff is going to make a difference, and of course the US dollar and the recession probability is going to make a huge difference. At the moment, these are all quite, tending to be in favor of where we stand today.
Right. Manish, we did speak about a lot of sectors that you're liking at this point in time. Any space that you would be avoiding still that are not looking that attractive to you?
Capital goods. I mean, capital goods, broadly, if you have uncertainty around the tariffs, plus you have a portion of allocation going to defense, within the overall constraints of FRBM, then this is one space where valuation is slightly on the fuller side. Plus, you'll have some implications of capital allocation when it comes to uncertainty around the tariff. So this is one space which could tend to underperform because of growth and valuations conundrum. But otherwise, nothing particularly per se. And the renewable space, of course, the PPAs, the uncertainty around PPAs, that's one area to watch out for, because again, out here it's the valuation. I think the biggest concern in the markets is only around valuations. Some of the names where there's decent growth, there's no comfort on valuation. So I think it's more to do with valuations, but on a sectoral space, it's going to be renewables and capital goods.
But with respect to valuation, Manish, do you like auto space as a whole? Because majority of these two-wheeler auto counters specifically, they are almost half versus what they were in 2024 with respect to their highs. And given this sell-off, Manish, some of these experts are now liking this space once again. Are you also in one of those camps where you will be bullish on the autos, or it is in a void right now?
No, the two-wheeler space, in fact, is doing quite well. I would believe, you have roughly around 2 crore two-wheelers getting sold in FY25. And primarily the numbers per se for, even if you look at, let's say, Hero MotoCorp or TVS or a Royal Enfield, they're coming pretty decent. And I think within the automobile space, the best positioning happens to be for the two-wheeler space. And now that, we are talking about a free trade agreement with the US, then obviously the autocom space also, particularly the ones catering to the export market, is likely to do quite well. And again, valuations, etc., out here have come off quite a bit, but it's actually a preference of autocoms and two-wheelers over four-wheelers at this point in time. And MSPV space, one needs to wait and watch for recovery on the growth side in terms of volumes. But that's where we stand. I think autos is broadly a neutral space, but a lot depends on how the news flows pan out around tariffs and how the growth picks up in the second half of the year.
Right. And those are the key themes to watch out for. And thank you so much for that, Manish, for actually giving us your rationale as well on all the sectors that you're liking or not liking at this point in time, and what should one actually watch out for when you talk about the market. So that was Manish Sonthalia outlining the market strategy going ahead. But if you look at the markets right